Hello, and welcome to TCOM Investment. This analysis is for TCOM Group on NASDAQ as of 4th of August 2026 with a share price of $47.09. The full report is on donation.ca. TCOM is China's #1 online travel agency, asset-light, net cash and cheap on clean operating earnings. This run the short-term call is upgraded from hold to buy on a confirmed 50-day line reclaim, and the SAMR antitrust overhang that capped prior reports has cleared, so it is a full-size buy across all three horizons. The quality here is real. TCOM is the #1 online travel agency in China across flights, premium hotels and outbound, running Kutrip and Qunar at home, the international TCOM app, and the Skyscanner meta search engine. It is asset light, a commission on the bookings it facilitates rather than owning the inventory, with roughly 80% gross margins, a 25% operating margin, revenue growing about 16.5%, and a fortress balance sheet carrying near $7 billion of net cash. Quality scores 75. On the price it is cheap, about 14 times clean forward earnings, or roughly 11 once you strip the cash, against a warranted multiple near 17.7, a ratio of 0.79, firmly in the attractive band, with a free cash flow yield near 6%. The near-term story is timing, and it just turned. TCOM capitulated to a $38 52-week low in June, then built a higher low and has now reclaimed its daily 50-day line at 44.86, holding above it at 47.09. The daily momentum backs it, a bullish MACD crossover with the histogram at plus 0.66 and RSI at 64.8, firm but not yet overbought. That is the exact trigger the 20th of July report named, so the short call is upgraded from hold to buy, and the conviction ladder reads full size, 2 of 3 entry paths met. The honest caveat, the monthly and weekly frames are still in downtrends, so this is a daily counter-trend reclaim into 47.70 resistance, not a full trend change, hence a neutral timing score of 48. The big change this run is regulatory. The SAMR antitrust matter that capped prior reports has resolved. A 5.2 billion yuan penalty, about $770 million, was accepted between the 25th and 27th of July with rectification underway. That removes the binary overhang, though the forced end of exclusive lowest price hotel deals is a modest take rate headwind, not a gate. The underlying driver, Chinese and Asian travel demand, is neutral. Domestic travel is softening on a cautious consumer, but the outbound and international recovery offsets it, so the driver neither amplifies nor drags. Two cautions stay loud. This is a Chinese ADR on a variable interest entity structure with a delisting tail, and reported earnings are inflated by a non-operating gain, so we score everything on clean operating profit. The risks are loud, and they are the reason the stock is cheap. TCOM is a Chinese ADR on a variable interest entity structure, so it carries a real delisting tail under US audit oversight law and capital control risk, a permanent caution, not a resolved one. Reported earnings flatter the picture. Roughly 58% of trailing net income came from a non-operating mark-to-market gain, which is why we value it on clean operating earnings only. At the budget end, Meituan and Tongcheng keep taking share, and the SAMR remedy strips out TCOM's exclusive lowest price lever, a genuine headwind to domestic take rate. And the tape is honest about its two-sidedness. The weekly trend is still down, so a value buyer here can be early. A failed reclaim trips the tactical stop at 44, 2 closes below it, and the bear case is a fall to $35, about 26% below today. The Q2 earnings print around the 26th of August is the next path risk event. Now weigh the risk against the reward. The bull case is roughly 40% above today, the base case the most likely about 13%, and the bear case a fall of about 26%, so you are risking about 26 to make 40. So, our call on TCOM Group, on NASDAQ, buy. Remember, this is for education, not financial advice. Always do your own research. This analysis is by TCOM Investment at donation.ca. The link to the full report is in the notes below. Have a great day.